So, okay, a lot of questions in there. Let me jump in.
Hello, everyone. Welcome back to the channel. Today, we're diving deep into a pivotal moment in the U.S. economy and why the Federal Reserve's recent decisions might just change everything. If you've been following the markets, you know that what happens in the next few months could be absolutely crucial for the future of the economy, your investments, and your financial future. So let's break it all down. On September 18th, 2024, Jerome Powell, chair of the Federal Reserve, made an announcement that could signal a major shift in monetary policy. The Fed decided to cut the federal funds rate by 50 basis points, bringing it down to 5%. Now, this might sound like a routine move, but let me explain why this change could have far-reaching effects. First, let's talk about what prompted this decision. The Fed has been battling inflation for over a year now, using aggressive interest rate hikes to cool down an overheated economy. Powell mentioned that inflation has been a huge focus, especially with a historically tight labor market, pushing wage pressures higher. The goal was clear: bring inflation down without crashing the job market. But now, the Fed is seeing signs that their strategy is working. Inflation has been cooling, and the labor market, while still strong, has started to show signs of slowing. So Powell and the FOMC decided it was time to recalibrate. Powell described the recent move as a recalibration, a shift from a restrictive policy stance to something more neutral. The 50 basis point cut signals that the Fed believes it's time to ease up on the brakes. They're trying to strike a balance between cooling inflation and sustaining economic growth. But here's the big question: why is this decision so crucial right now? Well, Powell explained that the risks between inflation and economic growth are now roughly balanced. This is a huge shift from the past year, where inflation was the #1 concern. The Fed is now more confident that inflation will continue to trend downward, but they also want to ensure that the economy doesn't slip into a recession. This decision is a signal that the Fed believes the worst of inflation might be behind us. However, Powell was clear that they're not declaring victory just yet. The next few months will be crucial as the Fed continues to monitor inflation, employment, and overall economic growth. But there's another layer to this story: global uncertainty. Powell hinted that while the U.S. economy seems stable right now, there are still risks out there, both domestically and internationally. Global economic conditions, potential financial shocks, and geopolitical risks could all throw the Fed's plans off course. In Powell's own words,
I don't see anything in the economy right now that suggests that the likelihood of of a downturn is elevated. I don't see that. You see growth at a solid rate, you see inflation coming down, and you see a labor market that's still at very solid levels.
But as we know, things can change fast. Let's talk about what this means for you, the investor, and for the markets. Lower interest rates generally mean cheaper borrowing costs for businesses and consumers, which can stimulate economic activity. But it also means lower yields on savings and bonds, and possibly a more volatile stock market as investors weigh the potential for more rate cuts or hikes in the future. Powell was clear that this isn't the end of rate cuts, but it's also not a guarantee of more. He emphasized that the Fed will remain data dependent, meaning they'll keep a close eye on how the economy evolves before making further moves. The bond market and stocks have already started to react, and we could see some major swings in the coming months. So why are the next few months so crucial? Here's the bottom line: we're in a delicate balancing act. The Fed is trying to manage inflation without triggering a recession. At the same time, they're keeping an eye on the global economy and any potential shocks that could derail the progress they've made so far. The decisions they make between now and early 2025 will set the stage for the future of interest rates, inflation, and economic growth, and it will directly impact businesses, consumers, and financial markets. Now, here's what you should do: keep a close watch on upcoming Fed meetings and any major economic data releases. Whether you're an investor, a business owner, or just managing your personal finances, staying informed will be critical as we navigate this next phase. The Fed just changed everything, and the next few months could be a game changer for all of us. If you found this breakdown helpful, make sure to give this video a thumbs up, subscribe to the channel for more updates, and hit that notification bell so you don't miss future content. This has been Wall Street Forecast, and thanks for watching.